I think 2023 is going to be the tale of two halves. The first half, I think, is going to be challenging. I think we're going to stay in the trading range. I don't know, call it, say, 3,600 to 4,200 kind of a range. And that is simply because we just don't know what the Fed is going to do. We also don't know what the Fed has already done. What is it going to do to the economy? We know it's going to slow down. What is it going to do to earnings, too? So there's too many questions, too many unknowns. And I think we will get to the point, end of first quarter, maybe early second quarter, where the Fed does pause. And then I think if they pause and they just become data dependent and they keep rates high, though, because that's what they've said, any data point that comes out in terms of better inflation, better growth, a Fed that does, in fact, pivot, because I don't think a pause is a pivot. I think as we get that, the second half of the year, we certainly will be, I think, higher. Do we get to, the highs of this year, 4,800? Possibly. We could go even higher if the Fed does start to turn and reverse course and start easing. But I think it's too premature to tell. If you look at a CPI number today, it's way too premature to say the Fed is going to stop. And then they're going to immediately pivot. They're going to wait a while. They're going to wait to see if inflation can be sustainably to that 2 to 3% level.